Welcome back everyone to XM.com. It's time for the US election. On Tuesday, we'll find out whether Donald Trump or Kamala Harris will be the next US president. But the counting of votes may take some days or even weeks, as the battle between the two candidates is very tight, especially in swing states such as Arizona, Pennsylvania, and Michigan. So in the meantime, traders may pay attention to other key events. The Fed and the Bank of England are also announcing their rate decision this Thursday. So there might be some extra volatility coming from central bank events. So I think that dollar pairs such as dollar yen, euro dollar, and pound dollar might be quite important to watch this week. And starting first with looking first at dollar yen. As regards the US election, Donald Trump is considered, his policies are considered more inflationary because he wants to cut corporate taxes significantly and raise import tariffs against China, which could consequently boost inflation and therefore delay rate cuts. If that proves to be the case, the US dollar may regain some power, and it will be interesting to see whether this upward pattern in dollar yen will continue in the short term. Currently, the pair seems to be overbought. Both the RSI and the stochastics have reversed to the downside following the peak near the 61.8% Fibonacci retracement of this download over here, and slightly below the 154 level. So it would be interesting to see whether the pair will extend this upper pattern above this range over here. So if that happens, we may see a fast rally up to 157. This is where the 78.6% Fibonacci retracement is located, and then above that, I have also marked the 158.50 region, since that area has been quite restrictive back in April and July. Now, in the event this downward move over here continues below this long-term constraining line, then the 20-day exponential moving average may act as support near the 50% Fibonacci of 150.75. Slightly below that, there might be a more critical support territory near 149.35. The 250-day exponential moving averages are placed around this region, so failure to pivot here may confirm additional losses towards the 38.2% Fibonacci of 148.11. And then below that, expect some consolidation near the 146.20, where another long-term ascending line from 2023 is placed. Now looking at euro dollar, euro dollar may become more volatile this Thursday following the Fed's rate decision. According to future markets, the Fed is expected to cut interest rates by 25 basis points. This is almost a done deal, so perhaps the rate decision may not cause strong volatility, but policy guidance could move for the pair, especially if investors notice a shift in the central bank communication on the back of the US election. So there's uncertainty about future rate cuts in the US that could bring some weakness in euro dollar, and perhaps we may see euro dollar falling below 1.0870, where the 200-day average is placed. If that happens, then perhaps some consolidation could emerge near the 61.8% Fibonacci retracement of this outlook over here at 1.0835. If not, then I expect the bigger battle to take place around this support trend line coming from October 2023 at 1.0780. So failure to rebound here could bring more selling likely, and that could initially see a retest near 1.0730 before we move towards June's low of 1.0665. Now, if the Fed appears more optimistic about future rate cuts, if it signals more rate cuts, particularly in 2025, that could help the pair to cross above 1.09 and perhaps reach the 1.0940 region. Above that, critical territory could emerge near 1.10. This is the neckline of this double top pattern. So A break above it could boost market sentiment, likely driving the pair up to the lower boundary of this broken bullish channel seen near the 23.6% Fibonacci of 1.1070. Well, according to technical indicators, most of the indicators are still sloping upwards, so that increases the odds for more gains. But we can see that the stochastic oscillator is also near its 80 overbought level, so I would have allowed a pullback in this pair. And finally, concluding with the pound dollar, well, the Bank of England is expected to cut interest rates by 25 basis points as well this Thursday. This is highly expected, so the decision itself may not have a great impact on pound dollar, but any direction about future rate cuts could move the pair, since there is no clarity about when the next rate cut will take place and how many rate cuts will be in 2025. So any direction there could cause volatility in pound dollar, and what pound dollar was at the moment is a clear close above 1.30, where the 20-day moving average is located. We saw the pair failing to cross above this line and instead falling to a 2-month low 1.2842 last week. So if the pair manages to cross above this border, we may see a bullish action towards the 1.31 and 1.3120 region, where this falling constraining line and the 50-day moving average are placed. So I would like to see clear close above that before targeting the 23.6% Fibonacci retracement of this uplift at 1.3160, and then beyond that, perhaps the pair may attempt to challenge the 1.3265 or 1.33 resistance zone. Now, since the technical indicators haven't actually left the bearish territory, downside correction would be a huge surprise if we close below 1.2955. That could take us down to the 50% Fibonacci of 1.2863, or down to a more important support zone near 1.28. This is where the 200-day moving average is located, while the price found strong support around this line back in August. So definitely that line will be closely watched before we target the 61.8% Fibonacci of 1.2730, and then the August low of 1.2663. So that's everything I wanted to share with you guys. We should have a great election trading in the coming days. We'll be back soon for our next technical update. Thank you for watching, and see you next time. Bye bye for now.